All right. You guys see that?
Yeah, looks good.
Cool. All right. So, um, there are multiple ways of swing trading, right? And for me, there's a lot of ways to make money in the market. There's a lot of ways to lose money in the market. And I've employed several variations of strategies. And I have found for me what makes sense in terms of my capabilities, in terms of what I feel comfortable doing. Swing trading for me has been the most profitable. Um, I love the day trading that happens at the market open, but where are you, Josh? Where are you living?
Nevada.
Nevada. So I'm not too far away from you. It's super early in the morning for me to be getting up at like 6 in the morning to get ready for the market open. Um, and so I'm definitely somebody that operates better in the afternoons. I just found that morning trading for me at the open is great for some, but for me, I found my niche much more so in swing trading because I can do it later in the day. I don't have to be rushed. I've got a little ADD. I'm not that person that's going to be. Um, I don't. I'm always going to perform better when I can think about it and spend a little time on it, and I'm not rushed. So I don't know if you're like me at all in that sense. Are you swing trading at all, or are you just doing the day trading now?
No, waking up at 5:30 is actually sleeping in by quite a bit. So getting up early is kind of
Normal
easier.
for you.
Yeah.
Cool, man. So there are some swing trade callouts in True Trader, and I learned all of this from True Trader. So I'm only teaching and I'm only discussing things that I've learned from them. So I'm just regurgitating a lot of that content, but I've been with them for like 2 years now. So feel pretty good about this strategy. And are you doing any swings currently?
No. When I first started kind of trading, I was into swing trading, but I couldn't really find anything that really worked for me. There was a few things that I kind of tracked, but not really.
Yeah. And I know how long you've been with True Trader.
I've just been with True Trader a couple of weeks.
Okay.
I've been in some other mentors, but this is new True Trader.
Cool, cool. Yeah. And so this isn't necessarily like True Trader like main strategy, but it's stuff that Adriano calls out and they send out the text messages. And if you've been here for a couple of weeks, I don't think you've probably received any,
No.
but you will. And we've got a few that I'm currently in that they call out. But then I also started picking out my own. And so basically, um, the most effective swing strategy that I've seen is you're buying into going long on high quality stocks that have had massive um, decrease in stock price within a span of 5 days. So the criteria is what makes it so simple is that you're looking for stocks that usually have 70% or higher institutional ownership. So you're looking for quality stocks, meaning these are things that aren't going anywhere. People believe in them, and that does that kind of helps you stay away from a dangerous situation. Um, but they've had a massive drop in a very quick amount of time. So just like the reversal strategy with day trading, it's the same with swing trading. Is we're looking for stocks that have made emotional moves, 20% or more. So 20%, 30% generally is what we see, and that's usually because of a bad earnings like report, or the guidance was soft, or like it didn't meet the expectations of the investors, and so the stock drops. People unload on it. Now, um, those are the optimal types of drops. We don't want to find drops where like something fundamentally has changed the company. That's a different story. You know, if there's risk of a stock being like the Chinese stocks getting the concern of being delisted off the stock exchange, like those are things that you want to stay away from. But if it's still the same business as it was yesterday, but just because of some expectations or maybe some kind of negative news came out, like some kind of tweet or something, and everybody was upset, um, and it drops, those are the kind of entry points that you look for. Um, so for example, uh, I was just looking at Facebook here. Uh, these are actually kind of good. Um, drops that we see, like with a company that has high institutional ownership. So like I'll go to Benzinga here. I'll type in Meta, Facebook. And you can see over here in the bottom right, it says institutional ownership 70%. You see that?
Yes, sir.
Uh,
More.
yeah. Then you can also go to like, I subscribe to this, so that's paid, but you can also go to like FinViz, because those numbers aren't always, you know, they're different on different platforms. So it's good to kind of double check. So like, obviously we know Facebook's good, but in general, if it's a stock you're kind of curious about, well, I'll go down here on FinViz, which is free. Institutional ownership here, it says 79%. So I know this is a stock that has good institutional ownership. We're looking at the charts here, and then recently, this is a daily chart. Recently on an earnings call, so again, these are the ones we like when something doesn't go right on the expectations. You know, this thing dropped 26% in a day. So that's when it gets on my watch list. That's like, okay, you know, I'm looking at these kind of things. Now, swing trading is all about cost averaging. So it's really a cash management issue. And if you do the cash management right, these trades work on a really high percentage. And that's what I like about swing trading, because with day trading, the problem I had is that I might have, you know, a 60 to 70% win rate, but there's always those 2 or 3, you know, ones that get you, and they always outweighed, not always, but they would outweigh my gains. So even though I had a high winning percentage, the losses were greater than my gains. And I think a lot of day traders have that problem.
Yeah, totally.
So for me, what I like about swing trading is that win rate, if you do it if you use the right method and you have the right technique, the win rate can be higher. Like I'll have to go back and check my notes, but my win rate on swing trades has been like 80% plus. And that always means that my gains can outperform my losses. But the only way that happens is by doing it correctly. So now that's the next step. So we've met the criteria. High institutional ownerships had a large drop, not a fundamental change in the company. Just, you know, expectations weren't met. And so I would enter something like Facebook here after on a day like this, right around this like 240 level. I see this that pink there, that pink dotted line is the monthly pivot. I would buy that. I didn't do this, by the way. I'm just hypothetically speaking here. I've in some other swings I'll show you in a second. But that's something that I'll buy in on. But it's so important that when you buy, you're buying with the expectations of adding at least 3 times. So this is where most traders get in trouble, is that they trade way too heavy. So they buy in once and like they don't have the opportunity to buy in again. Or if they do buy in again, it's like all their cash. So let's say you have $400 to invest. When you swing trade, that first entry should only be $100.
Okay.
With the expectation that if it drops and you set a level of when it goes down further, that you're going to add. So you're going to spend $100 here. Can you see this graph pretty easily?
Yeah. Is your blue line below that? Is that the quarterly?
So I should explain this real quick. The blue line here is the annual.
Oh,
The
okay.
gray line is the quarter, and the pinks are the monthly.
Okay.
So it came all the way down from 323 down to like 240. And I would buy right above this monthly pivot. So I would have gotten in here right around like 237. Okay. And then I would have only used $100. And I would say, okay, where's the next level that I'm going to add? And then I would have looked down here at this annual pivot and said, okay, so it's at 236. If this drops below, say, a 190, uh 192, I would buy something in this range.
Okay.
And that's why, actually, because I'm not the only one that does this. That's why you see a huge pump here. What happened? It started getting down to this level and it bounced back. Another area that you could look at buying would be the psychological 200 level. So if you bought 100 here at 237, you could have bought right above the 200, because that's a nice round number. We like those. So if you could have bought in at like 202, another $100. So now you're 200 in, right? I probably would have bought in around like the 188 or 189. I probably would have just missed it though. But that's okay. You know, that happens. But then there's a second buy that you have to get ready for. And so we're 200 in. Let's say that we bought at the 200, the 202. So now we're 200 in, right? So you still have $200 left on this trade that you haven't put in yet. That would be at your third buy-in. So that you could have set it here at like 185. You could even be really conservative and like, let's look back. You see a lot of support at this level. That's why that 202 and the 200 level worked out nicely. But like worst case scenario, I'm seeing a lot of support right around here. That one, like between 137, 150 range. You could have a buy like right above that, say like at 155 or something.
With your other 200.
Right. Because you want to double every time.
Okay.
Now, that might never happen, but that's okay. You know, the problem that people sometimes think is that, oh, well, like this strategy isn't ideal because, yeah, you maybe make 10% gains or something, but you only did it with half of your cash. But I always go back to the concept that, like, even if that's true, that's still better than just having your money right in the market where you make maybe 2% a month. And that's like really good. So even with this strategy, if I only got half of my money in and I make 10%, that's a 5% gain.
What are you basing your target at?
Yeah. Okay. So the exits will be based on the charts, but generally we want to buy stuff that's going to retrace, at least 10%.
Okay.
And that goes back to what I was just saying, is that you wouldn't want to do this strategy if you couldn't expect to make 10 or more.
Okay. Yeah.
So if I was buying, I bought at the 200, and I also bought at the initial drop at 230, 240, let's say. So that would make my average at 220. So I'll just put a line here. Okay. That's my cost average. And I would basically wait. I could unload basically if I got to this at this 243, maybe where the break happened. But I would just sell in portions, just like when we day trade, selling quarters or thirds. Okay. So I'd set one here. I might set another one here at this. You see this resistance from several months ago. I might set another one there. Maybe just below this, like maybe at this 249. And then I would set another one probably as this 50-day moving average. The yellow line is the 50-day. I might try to sell maybe at the 50-day. Let's say that it's at 272. Something like that, maybe. And so if we're going to take a measurement here, this is our average. At here, my first sell would be at 10%. My second sell is at 13%, and my third sell would be at 22%.
Okay.
And then what you can do is you can have another sell, or you can let it ride. So what I do a lot is I leave always a little piece, a quarter, to ride, just like I talked about with NFTs.
Okay.
And the reason I do that is, one, you're buying blue chip stocks. So like, why wouldn't you want to have some of that at a good price? You know, like you bought that at 220, like just hold it. And then for the psychological benefit of not kicking yourself, saying like, oh my God, like what if it went all the way back up to 373 and then a year later it's at 480? you'd hate yourself.
Right.
You know, so don't deal with that psychological anxiety and just know that, yeah, I'm in it. You know, I've got a quarter of my investment still in that long term. Great. I wish I had known that before when I invested in Tesla. It was before True Trader. I was a big Tesla geek, and I owned Tesla at like 250, 230 before the split. And obviously that thing is, um, where if we're looking at price before the split was what, 5-1 or 4-1? I don't remember.
I think it was 4-1.
4-1. So let's say, it hit 1,000. Well, that would have been 4,000, right? So
Yeah.
huge gains. I sold after doubling. I sold that like at like 400, 500. And it's so stupid. Like, you should sell in portions. Never sell the whole thing. Just cut it in half every time. Sell
Right.
half, goes up again, sell half again, sell half again, and then you have an infinite number of where you just write it up.
So are you set, like, so your average is 220, right? So
Yep.
are you, I mean, as Facebook as a reputable stock, and that's what you're kind of going for, those blue chip stocks, do you have a stop?
Great question. I did not answer that, and I don't. Not on these kind of stocks, because that's what if I should say that there are situations where I'd put stops, but I'd put stops on the ones where they're not the blue chip stocks. So I'll do
Okay.
some swings sometimes, like on stocks that don't have 70% institutional ownership or above. But for something like this, I'm happy to hold. I would just buy more if it went further down.
Okay.
These stocks aren't going anywhere. These institutions will come back in.
Right.
It will have its day where it goes back up.
Okay.
Now, obviously, there are some fundamentalists or people that are worried about the earth and the world and society and think everything's gonna, crumble. But that's not me. That's not my personality. I'm very okay with saying, if it comes to that, like if Facebook goes down and the whole stock market crashes, everybody's screwed. So,
Right.
it's not just me. I'm very comfortable with moving this in the long term if it takes longer to come back than I expected.
Okay.
But that does mean you have to manage your cash properly. So again, going back to cash management, that $400 that we're going to invest in this, that should not be all your $400. You should be able to do this 10, 20 times. So if you have $4,000, you should be prepared to be able to be in 10 swings at a time, because some of them, like you said, might not come back. And so you have to move it into long term.
Okay.
So that's, if you had $4,000 to trade, you can allocate 400 to 10 swings. And this is one of them.
Okay.
Because you're playing the numbers game, right? Because 2 out of 10 aren't going to work out the way you wanted. And they turn into long-term holdings.
So when you started this, I mean, you just basically stuck with blue chips. I mean, as you kind of grow your account and as you grow you're being more comfortable, you kind of move to less than blue chip stocks.
Yeah, and those ones you have to be able to let go of them and at a loss and have a stop. So like, for example, I'm in I'll show you one that I'm in now that I like is a Snap. So, but even this one, I don't know if I'd sell it, but Snap, for example, this is that one I'm in. So at Facebook, I actually wasn't in. It was just hypothetical, but this is an active swing trade that I'm in. And if you look here at the day I came in, it was right after this. They had an earnings call, didn't go well. They were at $75 up here, and they plummeted in one day all the way down to 55. So from here all the way down to 26%, down 26%. I bought in right around this level, right around here. and it's continued to go down. That's okay, because I'm planning on buying more. So it went down even further, and I bought again. Trying to remember where did I buy? I think I bought down at this pivot here, right around 45. And then it went down again, and I bought right above this annual pivot. So I went in 3 times. But now look where my average is. Now my average is right around like a 42 or a 43. And I'm only I would say like what, 5%? 5% loss at the moment. No, it wasn't at 44. I think I'm at 42. So I'm down like 7.5%. Considering that I came in at 55, that's the good example of good cash management. This is why these swing trades work, because you do it right, because you can't predict. This has been a terrible 6 months, by the way, for the markets. Right. So if you can make this work, and this kind of like last year was so easy on these things. And I made quite a bit last year. And it has been harder these last 6 months, but I feel okay. And I'm not hurting that bad, because I don't mind being in the red down 7% on a stock that could potentially come back all the way up to 75. Great. I'm happy about that. So that's something I'm just going to wait on. And that's why I've got these levels set here. These levels, I think, are my my sell levels, my alerts.
Okay.
I'll sell when I hit these, and I'll adjust them. Like, I'm pretty sure I put this up here when the 200 was a little bit higher. So I probably need to lower that to below the annual there. But yeah, that's the beauty of swing trading, is that even with these huge drops and it doesn't go the way you expect, you schedule in those buys. And now my average is right around that 42. I mean, if you had told somebody that you could have owned Snap, 6 months ago at $42, they would have been like, hell yeah, I'll take that deal.
Yeah. And I mean, you're almost green on the trade already.
Exactly.
So.
Even though it's gone against me multiple times. So that's really the most important part. Is it's not about picking the right trades. It's about managing your cash properly.
I do like that.
Yeah. That's and I don't know. That's all I gotta say, man. That's the strategy. And even in a market like this, like, it works. And it's just about using the right amount of capital, not overextending yourself, not going too heavy, finding those good stocks that have those big drops, and then setting the levels that you buy. And this takes, maybe 2 hours out of my day to go and like check on these things, look for them. You have the pivots, you have the swing scanner from True Trader. And I just sit, in anywhere between 5 and 10 swings at a time.
No, that's simple, but it makes super clear sense.
Yeah. So I would next, we will. So I just called out a swing. It's not quite the same strategy, but it is a swing that True Trader called, and it was JPM. Did you see that in the group?
I probably did. I don't remember it, but I probably did. Oh yeah, no, yeah, and it went up that same day.
Yeah. I called it out a little late, and that was my fault. But yeah, but buying this at the 140s, it doesn't fit the criteria of what we just described, but it did here. So it went down from not quite 20%, but this is Morgan, JP Morgan. So, a drop of 14% in 5 days from 1, 2, 3 here. It went from in 1, 2, 3, 4, 5 days, it went 12%, and then it went all the way down to 16%. I mean, this area is buy at these levels, right at this quarterly pivot here. I mean, that's easy money. Easy money. No sweat. I wouldn't break a sweat buying JP Morgan.
Yeah, that's blue chip as it gets.
So that's the stuff you look for. Like, hell yeah. And if you wrote it up properly, you could have bought, you could have sold right there. But I actually sold a piece here. I was little caveat. I did some options with this, but we're not going to talk about that. But I sold some options here, and then it came back down, and that's when I called it. And I was like, hey, this is again something that I feel comfortable with people getting into. It could go down more, but that's why we have the ad levels down here.
Right.
Oh, that's another thing that I suggest when you're looking at these stocks is you want to make sure that you can see significant support levels.
Okay, yeah.
Like if you see like a big gap like this, like from 128 to 100, that's a little nervy. I'd be afraid to like buy something here for the first one, or the second one when you have this large of a gap, and only because it's a blue chip like JP Morgan, I'm not worried about it, but you do need to be careful. That ideally what you want to see is a support that you buy, and then not too far below you see even stronger support, because you want to be able, in some ways you want it to come down to this level so you can put in more money, but you want that to usually be the level that it bounces off of. And then you always have your third level that you buy in again. But it would be too large of a gap if it went all the way down here. That's not ideal.
So if you see that though, like on a blue chip, right, you got your annual and your quarterly that are tight right there at the bottom. And then you got that huge gap all the way down to 100.
Yeah.
If you see that it break those two and goes to 100, I mean, is that like, if that was your first buy, would you be more conviction to get in on that?
You mean if it broke this and it went all the way down to here?
Yeah.
It wouldn't be necessarily more conviction. What I would do is I'd want to make sure that the next level below that wasn't too far.
Okay.
So I'm just saying that the support levels, you want them not to be huge gaps.
Okay.
Because what can happen is if it breaks that, and it could drop pretty quickly. Again, this is more so for stocks that aren't JPM. With this one, the movement's not going to be as volatile. And I remember why. I remember where I bought actually is the call out in True Trader was actually at this level, I'm pretty sure, if not that level. So I actually bought here in the beginning above this, and knowing that my second buy-in would be here.
Okay.
So it's nice little double support levels here. And you can see it on the daily here, this resistance here, or support. Go ahead.
On your third ad, so like we were talking about Facebook, and we were talking about that 180 level is your third ad, but it didn't hit that. Are you still looking for a third ad on the bounce back up, or are you just letting those two ride, and if it ever comes back down, you're going to add a third time?
I wouldn't worry about it in terms of feeling like I need to put that other 200 in. No, like just that's what I was saying, is that if you make 10% only on half of your money, that's still better than investing long-term in the market.
Perfect.
Now, if it did come back down, what would be the criteria for me to go back in on it? It would need to be a fast drop. So again, it goes back to 5 days or less. You need to see like a 20% drop.
Okay.
And those are going to be the high conviction trades. Let's see, what else did I buy recently? I bought into Airbnb on a couple of these dips. Like I love this kind of stuff where I saw Airbnb come down. It was up here and it went all the way down to it dropped 20% in like 4 days. 1, 2, 3, 4, 5, I guess. I bought at these 130 level on Airbnb has done me so well this year. Great support here. So again, if you saw, I didn't do this, but if you were looking at Airbnb here, it went up to 190. And then in a matter of just a few days, it went all the way down 24%, down to 140. You got to have the conviction to buy that stuff. Again, Airbnb, these are great companies. And they're dropping 20% in a few days off of some news or something. Was it news that's going to affect the long-term outcome of Airbnb? Probably not. If you had bought in on that, you could have sold out just in one day on a nice gain there. 10, 11%.
Yeah.
Easy. And even if you hadn't sold, you have a good entry point. Just let it ride. This stuff works for crypto too. It's a little different. I wouldn't do the same thing here. But it's the same principle, but you got to understand that crypto is more volatile. Yeah, you see like here in May, what we had, it came from this all the way down to, where is that wick? Right there. In a matter of about 5 days, you had Ethereum drop almost 50%. So the volatility on crypto is going to be greater. So you have to be able to recognize that that's different than the stocks. But it's the same principle. If you're watching closely and you're looking at this stuff, basically, okay, I'd start to buy in at this monthly pivot here. I also see, that's why I have an alert here, right? There's this nice level of support here. See that?
Yeah.
So you could have bought in right above that monthly pivot, and then you could have had an ad right above this annual pivot right here.
Okay.
And you could have made, well, let's assume that you had averaged out. So you would have averaged out right around here probably. You could have been selling up at this pivot, or this quarterly pivot here. You could have made 43%.
Jesus.
Yeah. So it's just about keeping your eye on the markets and looking for those huge drops. And again, making sure that you check the news and it's nothing fundamentally, destructive to the company. It's just the way the market is, or what, it could be, basically anything that's not going to fundamentally alter the business. Nothing fundamentally was changed about crypto or about Ethereum in these few days. Nothing. So when it drops 50%, you're like, well, wouldn't you want to buy that when knowing that nothing's changed?
Yeah. Do you have a stop on crypto?
I don't, with the blue chip crypto. So there's a lot of crypto out there, right?
Yeah.
Ethereum, no. I'll buy more Ethereum any day.
Okay.
Yeah, I'm long term on crypto. I'll buy these dips. I'll sell portions, and then I'll always leave a quarter to ride, and that just slowly builds and builds and builds.
Okay.
I'm doing the same with Solana. This one's a little bit more interesting. This is a small cap, so this is not your blue chip. This is more speculative. But this is like a gaming platform, PYR, and that crypto, for me, these are risk reward plays. So I'm looking to not just make 20, 30, 40%. I'm looking to make 3x, 300%. And so I like these because I see these small cap cryptos can pump from 10 all the way up to 40.
Right.
So what I'll do is I will find stocks like, well, first I'll need to make sure that they're good small caps. You don't want to just buy shit, but this is a good one. A lot of people vouch for the team and what they're working towards. And I see these, I see the 200-day, the 50-day, and the 20 days moving averages. And I see this consolidation here. So these are the kind of stocks that or crypto that I would be okay with entering, looking for pops all the way back up to, I got my alerts here already set. I think I got like 10 grand in this 28. 28 is my first sell. So like I'm going big,
Yeah. But it'll probably get there.
What'd you say?
It'll probably get there in due time.
Yeah. I wouldn't do it if I didn't feel good about it. All it takes is for Bitcoin and Ethereum to when they take off, the small caps take off. But when Bitcoin and Ethereum takes off, you maybe can 100% gains, maybe like it could double. But with these, you could quadruple. So it's worth the risk to me to just have some money sitting there.
That makes sense.
Yeah. Cool, man.
Do you trade those cryptos off of Coinbase?
I depends. So I will trade usually off of I think for trading the best one is FTX.
Okay.
FTX US. So the US has so many special regulations. So a lot of the platforms you might see on YouTube and stuff you can't use here. And so FTX has two apps. One is for Americans and then one is for the rest of the world. But FTX allows you to trade more like a trader. And I'll use Coinbase more for just buying long-term stuff, just like holding stuff. Like I have a Coinbase credit card now, so I can actually just make Visa payments, like buying gas or going out to dinner now in crypto. It's pretty cool.
Oh, no, that is cool. But yeah, I've used Coinbase. It's like brutal if you come from a trading platform.
Oh yeah. No. Don't. Yeah, totally. I know what you mean. FTX, even that isn't quite what you would expect from a trading platform, but it's better.
Okay. Anything's better.
I don't know if you can get PYR on FTX, and you can't get it on some of these small caps. You can't get on Coinbase as well. So I buy my PYR off of crypto.com.
Oh, okay.
I found crypto.com has more small cap options.
Okay. I haven't even played with that one.
Yeah, that one, same problem though. They're not good for trading. Like it's not easy to figure out like what your average cost is, like they don't make any of that stuff easy.
It helps that TradingView kind of stepped in and showed at least got some good charts and stuff.
Yeah, for sure. But it's good to just have your own Excel or whatever when you trade crypto, just to kind of keep track of what you're doing, because it's real annoying, the platforms. I agree. Yeah, PYR you can get on crypto.com.
Okay, cool.
I also like Solana. Definitely in Solana. That one's taken quite a hit, but I mean, man, if you're just getting the Solana and you could just start buying it in the 80s, hell yeah. You said you're gonna be on March 4th, yeah?
Yeah.
Yeah. Buy some Solana, man. Buy some Solana. Again, everything needs to be diverted intelligently and don't take too much risk. So you could probably get some ETH, some Solana. And you can always let a little bit, leave a little bit of cash. You could put it into USDT or USDC. You know what that is?
Yeah. So I have a little bit in USDT and then I have Ethereum too, ETH.
Yeah, cool. So I always try to keep as much USDT or USDC as possible, knowing that I got an alert set right here. That if it comes back down to these levels, I'm buying more.
Oh, that's smart.
Yeah. I'm always ready to buy in more. That's the key. You always have to have enough cash to keep buying. Seriously.
Solid.
Um,
It looks good. It's like it's just kind of free falling down, but looking for a bounce.
yeah. Well, and this is more long-term conviction because I believe in a lot of the crypto space. So there's a belief factor there as well. If you were just looking at the charts from a swing trader perspective, there's nothing pretty about this. You're below the moving averages. So you got resistance above you, a lot of resistance. It's been a grind down. Like there's nothing pretty about it from a trader standpoint. For me, these are uh, long-term buy-ins. I'm like, if I could get Sol, because I believe Sol could be, a $500 dollar coin at some point.
Does them backing, so like with ETH and Sol, with the NFTs being bought by them, is that a booster for the price of the token?
Absolutely, yeah. That's why I believe in Sol, because
Okay.
I believe in the NFT space. Um, and I mean, it's not the only reason, but you see a lot of decentralized applications being built on Solana more and more.
Yeah.
The increase is phenomenal. And so that just means to me that the ecosystem of Solana is not going anywhere.
Right.
And that's what I'm investing in. I'm people, there's a big misunderstanding from mainstream consumers about what cryptocurrency is. They think it's a currency, which is understandable. It's how I thought it was originally too. And if you look at like something like Bitcoin, yeah, it kind of is a currency. It's basically just a ledger of looking at where money or where numbers are coming and going. But things like Solana, things like Ethereum, really what they are their networks, and things are built on top of those networks. It's like an operating system. So it's more like buying Microsoft Windows. Does it make sense?
Yeah. And
Um,
I still think I kind of treat them as currency as I continue to learn about them.
yeah, and that's fine. But once you make that adjustment to realizing that what you're buying is an operating system, because it's a network that then it's because of the smart contracts. What you're doing is you're creating a decentralized network, an operating system that's shared by a bunch of devices, and then they're building applications on top. That's what Windows is. Microsoft comes out with a platform, and then you build Office on top of it. You build Word, you build PowerPoint, you build all these things on top of it, and then everybody works on top of this layer one platform.
Okay.
And that's what NFTs are. NFTs are just created on top of Solana, on top of Ethereum.
Yeah. Starting with that.
Yeah. So, and going back to what I was saying is like when you buy NFTs or when you buy cryptocurrency, what you're doing is you're actually buying a piece of the network.
Okay.
So you're buying shares, and those shares have value, just like a stock. So I don't think you're buying currency, you're buying shares. And you can trade those shares. And so it can act as a currency, but that's not its fundamental purpose.
Okay.
Now that's different than Bitcoin. So that's why not, all cryptocurrencies got their own thing going on, but Ethereum and like Avalanche and Solana, these are layer one protocols that are meant to be operating systems that things are built on top of. And so why wouldn't you invest in Microsoft Windows early on? Would you not have made millions, if not billions, investing in Microsoft like in the 80s and 90s?
Yeah.
That's how I see Solana and Ethereum.
Okay. I've never talked to anyone that's had that mindset, so that's kind of a cool different way. Definitely. I understand it.
Yeah. You'll get a lot of people, we're in an echo chamber here that we both like cryptocurrency. You get people that'll disagree with me, so but that's the way I envision things moving forward. is this more and more integration, more and more decentralized applications, blockchain being used. Yeah. So if you look at there's a report you can read that comes out from DApp Radar. Stands for decentralized application. DApps is what they call them. DApp Radar. They pull out these reports, and it's just amazing to see the growth. Like there is so many new applications being built on top of these blockchains. Like that's what gives me the confidence. Like you have a group of engineers in the world, the smart engineers that are all putting their effort and interest into building stuff on top of this, not on Windows.
Okay.
When nobody wants to go work at Microsoft Office unless you're giving them a really good paycheck.
Right.
But people, smart engineers, will go work in Solana and work in Ethereum and build dApps. You know, you don't need it. You don't need to twist their arm to do that. They just get it. They're like, yeah, this is the future.
Right. No, that's freaking cool, man. That's awesome.
Yeah. All right, man. I think that was a good live stream. Thank you for being my guinea pig while we talked about this stuff.
No, dude, I appreciate it. That was eye-opening.
Cool. So if you don't have any more questions, we'll wrap it up, and I'll see you on the Discord.
10-4. Thanks, man.
Yeah. And just because I'm going to edit this video, just so you guys know, this is all part of Alpha Traders Country Club, and we are a group that shares information on trading, whether that's stocks, crypto, or NFTs. If you want to be part of this club, we're always exchanging really good information, creating a community, making friends. Come and join us. And you got to do that by subscribing and coming into the Discord. That's where all of the conversations are. So click on the link in my bio, and I will see you guys at the club. Cheers, guys.